The CFA Institute recently reported that they are adding a record 21,380 new chartered financial analysts. This will add to the existing ranks of about 167,000 who already hold this CFA designation. CFAs are investment management professionals and work as consultants, financial advisors, or portfolio managers. With expansion plans, the membership is planned to increase again next year. I'm told that the process to become a CFA is difficult, with 3 or 4 years of study, work, and tests. So a few questions come to mind. First, with all of these CFAs studying the same material, taking the same tests, and complying with the same theory and methodology, do you believe there is an original thought from any of them? Now, I'm sure these are very nice people, but when everyone follows the same logic, no wonder why they can't beat the S&P 500. Secondly, since the great financial crisis, the only thing an investor needed to do was follow the easy money from the Fed. So to me, it seems like a big waste of time and money going after the certification. Well, what do I know? Speaking of the stock market, how are things doing? Well, let's take a look. We're going to look at two charts today, beginning with the 20-year monthly chart on the spiders, the SPY. The close on Friday was 292.45. And the main thing we can get from the price chart going back to, say, early 2016 is, for the most part, the price chart has ridden along or above the 20 EMA, with the exception of this drop there in late 2018, early 2019. I think we're going to continue to ride that 20 EMA. Moving on down here to the MAC, we can see that the fast line is trying to move through the slow line here, but it's cutting it very, very close. In fact, the Axeman might say, yeah, razor sharp. Well, the fast line is trying, hasn't moved through there yet. But the one thing you can get from this chart here is going back to 2009 up to the current time frame. We're riding up that general trend on the way up. We're at the 10 level, which is fairly strong. So I do have some confidence that the fast line is going to move through that slow line, and I think the price is also going to continue to carry on upward. Moving here into the histogram, pretty much the same thing. You can see that the price rate of change, similar to 2015, 2016, is trying to bottom. You can see that dish forming. I think it's going to form here in a little while. I think this particular fast line is moving on down, may move through here, but I think it's still going to bottom out and head back up and form that nice dish, that basing pattern. You can see similar characteristics here in the RSI. We're at 58.55, which is slightly above that midline or the 50 level, which is fine. We're doing well. Looking at the stochastics, you can see that this pattern here is shaping up somewhat similar that it did in 2015, 2016. Volume, can't say much about that, just continues to drop, but I'm not sure that really is all that important these days. And then into the Williams, and the Williams looks pretty good too, being in that overbought territory here, but I think it's going to stay up there for the time being, so no worries there. Back on up to the price chart. One last look for you. Now let's go to our next chart. This next chart here is the 20-year monthly chart on the iShares Russell 2000 ETF, and the symbol is IWM. And I want to look at this because this index has been a laggard. So if this index can pull it together, then that gives me even more confidence for the other indices. And looking here, it looks fairly decent with the exception, the difference between, say, the Russell 2000 and the spiders is that we're below the 20 EMA here. So it's fighting. It is staying above the 50 EMA, but it has a bit of a struggle here with the 20 EMA. And you can see that here in the MAC. If you recollect the last chart of the S&P 500, that MAC, the fast line is trying to move through the slow line. Here we're not. We're continuing to drop, a little bit of acceleration here, but there is again that struggle, and you can see that struggle here in the histogram. You see that's very choppy on its way up, but it is improving back up here to the MACD itself, and I think it's going to take some more time before it bottoms out, but still it's above zero, so it still has that strength, and it's if it's able to collect itself and turn sideways and move up through the slow line, such as it did here in 2015, 2016, then we're going to be on our way because this, again, is the index. That's the laggard. Moving here into the price rate of change, similar to the S&P, you can see that things are forming, trying to form that basing, that dish pattern, and then head on up. Now, it doesn't look too good with this most recent fast line heading on down, but in my opinion, we're going to be bottoming here. It's going to take maybe another month or two or so to really start forming better of a position, but I think it's happening. You can see some of that here in the RSI. We're up near that 50 or midline, so it's hanging around there, and I think the strength will return and it'll head up down into the stochastics. Pretty much the same thing. Volume is fine. And then here into the Williams. The Williams is weaker than the S&P. We're down here near the midline, that 50 level, but I think it's going to gather some strength. It's going to take it a month or two or so, and then hopefully it'll be on its way. But I do have confidence, at least that's where the probabilities lie, that things are repairing and they're strengthening, and you can see some of that struggle here, but I think sooner or later the upward movement is going to win out, and we're going to be heading up on our way. And so for today, that's ChewDog Charts. Thank you.